Hi there, welcome to Kneppy Invest. In today's video, we are going to touch upon a company I really haven't looked at too much in the past. Maybe briefly in a few other videos, I've looked at this company, but I really haven't delved too deeply into Auctus Investment Group. This is a private markets asset manager. They also have some minority interest in other asset managers, including some venture funds within the United States, if I remember correctly. But as I delved a little bit more deeply into their June quarter results, because this company was operating cash flow positive, not only for the quarter, but also for the financial year. And then I went to their website just to see what sort of investments this company has. I became interested in a couple of their investments. The first one is a company called PETstock. As a pet owner, I'm really interested in the quality of pet stores. And this pet stock is just up the road from me, and I quite like it for a couple of reasons. First reason is they do have some products that other pet stores like Pet Barn don't have. The other reason I like it is because it is in walking distance, and I can take my dogs there on a walk and go into the store, because most pet stores do allow you to take your dogs into those stores. So a couple of reasons why I like pet stock. And because Auctus Investment Group have an equity stake in PETstock, that made me a little bit more interested in this company. Then I delved a little bit more deeply into the other investments this company has made, and I became even more interested in Auctus Investment Group. So let's have a look at all these investments that have me interested in this company. And these are the investments that Auctus have made over the past 3 years. Started with Unite US, which is a New York City-based healthcare technology company, invested at $210 million post-money valuation, and the current valuation of the company is at $2.2 billion. So that company seems to be doing quite well. They also invested some money in Scout Ventures, which is an early stage venture capital firm in the United States, and then PETstock. So they invested $58 million into PETstock. And I was surprised to see the amount of PETstock stores there are in Australia, way more than I thought. I know of only one, but so I was looking at the amount of pet stores or PETstock stores in Brisbane, also in Melbourne and Sydney, and they're way more than I thought. Luxury Escapes, $73 million in this online travel technology business. ES Volta, which is a battery storage company in North America, raised 33.5 million for that company. Student Quarters, they've got into a partnership with Student Quarters in relation to US student housing. And I think this is an amazing opportunity. Now, as a student in the United States and also in Australia, there is pretty good yield or pretty good margins within US student housing. And they've actually opened up or established and listed a US Student Housing REIT, which has a ticker code on the ASX USQ. So I'm actually interested in that REIT, and I was thinking to myself, should I invest in Auctus to take advantage of this US Student Housing REIT, or just invest into the REIT? But because of PETstock, I'm probably more willing to invest in Auctus. So this company has a lot going on right now, and we can see that with the valuation or the assets under management. Also, the valuation of the company has been climbing over the past few years. So the market is becoming a little bit more aware of this company right now. Auctus Investment Group was founded in 2018 via Highline Alternative Investments. Sort of an interesting history here. So there was this fund called Highline Alternative Investments, and another company on the ASX called Yonder and Beyond. And I've always wondered what happened to Yonder and Beyond. But whatever Yonder and Beyond were doing, it wasn't successful. And then Yonder and Beyond bought Highline Alternative Investments, or maybe it was a backdoor listing. And then Highline Alternative Investments changed the name after Yonder and Beyond bought them to Auctus Investment Group. This was in March 2018. So this company has been on the ASX for just over 4 years. The current CEO is Campbell McComb. He's been in that role since March 2018, when they became Auctus Investment Group. Shareholders, so a bit of skin in the game here. So McComb owns 7.3%, and PETstock owns 3.2% of Auctus Investment Group as well. And the current market cap of Auctus Investment Group is currently 85 million. That's a share price of $1.10. Share price was less than 20 cents 2 years ago. So share price has really taken off over the last few years. And there's a couple of reasons behind that. I'm going to touch upon that during the rest of this video. And the ticker code for this company is AVC. Now let's delve into the Appendix 4Cs for Auctus, and we'll have a look at the June quarter for financial year 21, and then we'll look at the June quarter for financial year 22 in the next slide. Not sure how helpful just looking at the cash flows from operating activities is, but this is what I do for all these videos, and you can glean a little bit of information from these cash flow statements for this company. So receipts to customers 1 year ago, $1.1 million, and the company was operating cash flow negative by $255,000. They did do a significant capital raising, raised $10.1 million in this quarter. And because they didn't really spend any money or much money in investing and financing activities, only $282,000 in investments activities, most of that capital or capital raising went to the bottom line, and the cash on hand actually did increase from $5 million to $14.5 million. The other thing I thought I should really focus on here is assets under management, also the amount of assets under management that were fee earning, and this is taken from their June quarter for financial year 21, and we'll have a look at the updated table in June quarter, February 22, in a couple of slides. Now, we have seen assets under management increase at a consistent rate over the past 2 years. So this is done on a half-yearly basis, increasing from less than $50 million all the way up to $350 million. So that's in about 2 years. So the assets under management have increased significantly in just 2 years. Not all of that was fee earning, however. So about $247 million were fee earning in June 2021. So you can see half of the assets under management was private equity, and half of the assets under management was private real estate. Now let's have a look at the June quarter results for financial year 22. And we have seen a significant increase in receipts from customers up to $4.2 million. Now, this company doesn't spend a lot of money in product manufacturing, operating costs, staff costs, and administration costs. Because they don't spend a lot of money in those areas, this company was operating cash flow positive in this particular quarter by $1.6 million, and for the full year by $4.1 million. Now, the cash on hand actually increased by $4.2 million. They didn't make or do any capital raisings in the year. The reason it increased by $4.2 million is because they received $3.5 million from a cash flow from loans to other entities. So in the previous quarter, or the quarter before that, they actually did borrow some money, lend some money to one of their investments. I think it could have been ES Volta. I can't remember exactly which company they did lend money to, but they received money back from that loan to the tune of $3.5 million. I think the interest rates on that loan were about 10%. So that's why the cash on hand actually increased by $4.2 million. And in fact, they have $10.6 million of cash at the end of this quarter, the end of the financial year. They spent another $239,000 on investments, so not a lot on investing. Now, to the assets under management, this only goes back 1 year. So remember last year, they went back 2 years. Now this only goes back to 1 year. But we can see the increases in the assets under management in just 1 year, increasing from $350 million to $527 million. $210 million, that was private real estate, and $317 million in private equity. And they also mentioned in the commentary that all assets under management is now fee earning. So that's how they're deriving their revenue, their cash receipts, is through fee earning of these assets under management. Now let's talk about capital allocation. This become obvious. Well, I'm talking about this in the next slide or in regards to Auctus Investment Group. So when a company is generating money in their operations, it is up to the management of the company to decide what to do with that cash being generated in the operations. This is one of the most important decisions a management of a company need to do. In fact, there is some theory that capital allocation is the most important decision the management of a company has to decide to do. And if a management or a CEO of a company is highly skilled at capital allocation, that can go a long way into generating a very successful company in the long term. So when a company is generating a lot of cash flow in their operations, they can decide to do a share buyback, particularly if they think the valuation of the company is lower than it should be. They can issue dividends or give back a capital return to the shareholders, or make some acquisitions, or spend money in research and development. Now, research and development for Auctus is probably out the window. So the management of this company can do a share buyback, issue a capital return to the shareholders, or maybe make some acquisitions. Those three things are definitely in the picture when it comes to Auctus Investment Group because this company is operating cash flow positive. So, what has Auctus Investment Group management decided to do with this cash on hand they have generated in their operations? They've decided to do an on market share buyback of up to 6.14 million shares. Now, this says to me that the management of this company believes the valuation of this company is lower than it should be. And that's the only reason the management should do an on-market share buyback, because that is creating value for shareholders. If the valuation of the company is lower than they believe it should be, if the valuation of the company is really stretched, then that's actually really bad capital allocation decisions by the management. So that's what that's saying to me. When they're doing an on-market share buyback, they think the valuation of the company is lower than it should be. They've also proposed a capital return of 5 cents per share back to shareholders, subject to shareholder approval in early Q1 financial year 23. So the management of this company is thinking about what they're going to do with the cash on hand. I was a little bit surprised because I thought they probably would have moved towards or gone down the acquisition route, because that's what this company does. They look for really good opportunities in regards to these private companies that have the potential to grow significantly in the future, and then they put their money to work by making an investment in those companies. But they decided to go down another route here with an on-market share buyback and also a capital return to its shareholders. Now, onto the receipts history for Auctus. Now, I wasn't initially going to include this slide in the video, because one of the things I want to see, particularly when they release their full year results soon, is a breakdown on where their revenue is derived from. Now, I didn't see that in last year's annual report or full year results, but I'd like to see exactly where they're getting their money from. So are they getting the money from dividends from PETstock, or rent from their US student housing, that sort of thing? I just want to see a breakdown of where they're generating their revenue, because when you look at the receipts history, it is quite lumpy, but receipts are starting to climb. And can we expect to see receipts climbing from here? Because there is a little bit of lumpiness, and that is one concerning thing, is just the lumpiness in receipts at this point in time. And should we expect this lumpiness to continue in the future? Those sort of things I want some clarification on. So hopefully I'll see some clarification when I look at their full year results that should be released in the next 2 weeks. Now to the weekly chart for Auctus Investment Group. This goes back to 2017 when the company was called Yonder and Beyond. But when they did transition to Auctus Investment Group, not a lot of interest in the company at that point in time. Share price was just drifting lower and lower and lower. The share price reached a low of about 12-13 cents back in March 2020 during the COVID-19 financial panic. But then we saw the share price become a 10-bagger from March 2020 all the way through to about, we'll say, October 2021. So over an 18-month period, this was a 10-bagger for any shareholders who held strong. But we did see the share price pull back during the first half of 2022. Share price pulled back from $1.35 down to 88 cents. But we have seen a rebound in share price over the past 2 months. But definitely, share price is moving in the right direction when you look at the long-term trend. And I think this is an interesting play, particularly if you do like the investments this company has made. The things I'm more interested in are PETstock, also the US Student Housing REIT. I'm also interested in that energy storage company. So a few investments to like when it comes to Auctus Investment Group. That's all I have for this first look at Auctus Investment Group, focusing on their June quarter results for financial year 22. The company was operating cash flow positive for the quarter and also for the full financial year. Some interesting investments, particularly that PETstock. I've already mentioned this a couple of times, but I'm really interested in that PETstock company. I do like PETstock. And for the very fact this company has made a fairly significant $50 million plus investment stake or equity stake in that company is of interest to me. Also, that US Student Housing REIT is of interest to me as well. If you do have any thoughts, any comments, any questions about Auctus Investment Group, just leave in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.